Welcome to the Deep Dive, your shortcut to being well-informed. What a week it's been. Just unexpected twists and turns everywhere, it feels like. Business, economics, tech. We saw numbers sparking, well, real public outrage. A tech titan making a pretty surprising career shift, and, these geopolitical chess matches playing out, especially on the global trade board. So we've pulled together a whole stack of sources, economic reports, earnings calls, political analyses, the works. Our mission, as always, is to cut through all that noise, deliver some clarity on these fast-moving stories. We want you to walk away not just informed, but maybe with a few genuine aha moments about, how things connect.
Absolutely. And as we unpack all of this, you'll really see how things like government policies, tech advancements like AI, and, well, corporate strategies, they're all weaving together, intertwining. And that creates both, opportunities, but also some pretty significant challenges across industries. And for individuals like you, it's a fascinating snapshot of the forces shaping our world right now.
Okay, let's dive in. Maybe start with the latest jobs report. That certainly stirred the pot. The Labor Department reported, 73,000 jobs added in July? Pretty low. And the unemployment rate ticked up just a bit to 4.2%.
Yeah, but here's where it gets really interesting. The BLS, the Bureau of Labor Statistics, they also revised the job gains for the prior 2 months way down, like by a combined 258,000 jobs.
Yeah.
Which is, well, it's not a minor tweak. It makes the average pace of job growth May through July the weakest it's been since 2009. If you exclude the pandemic recession in 2020, obviously, and historically revisions that big over several months, they've pretty consistently lined up with recessions going back to like 1968. So it suggests maybe the economy is weaker than we thought.
And that news clearly didn't sit well with President Trump. He publicly fired the BLS commissioner, Erica McIntarfer, said the numbers were rigged, phony, designed to make him look bad.
Right. Which immediately makes you ask, well, how reliable is this data? Especially when it gets caught up in politics like this. You had the former BLS commissioner, William Beach, call the firing groundless, said it undermines credibility. And experts, generally, they consider the BLS the gold standard for stats. Revisions, even big ones, they're actually a normal part of the process. More data comes in. Employers maybe miss the first deadline. It's like a weather forecast, right? A meteorologist updates it as new information comes in, more precise data. The issue, according to a lot of economists, isn't necessarily the data itself. It's the public perception of its integrity when it gets tangled up in politics.
Yeah. And what does this whole mess mean for the Federal Reserve? They just held interest rates steady last week. And now some are criticizing that decision, right? Including two Fed governors who dissented, Waller and Bowman. They pointed to weakness in the labor market, didn't they?
Exactly. And if you zoom out, look at the bigger picture. If people start doubting the data, there's a lack of trustworthy numbers, that creates uncertainty. And uncertainty can actually drive up borrowing costs across the whole economy. So the integrity of these stats, it's just paramount. For the Fed, for businesses making investment choices, for government agencies setting pay, when that trust starts to erode, the ripple effects can be pretty significant.
That makes sense. And it's worth noting, too, experts also point to other factors slowing job growth, things like business uncertainty around tariffs, immigration policy. Apparently, 1.4 million people dropped out of the labor force since April, including, over 800,000 foreign-born individuals. Adds another layer, doesn't it?
It really does.
So while the administration is dealing with the fallout from the jobs report, they're also making changes inside the government itself. Like, federal workers no longer have to report their weekly achievements. That 5 Things program Elon Musk championed.
Yeah, that's gone. Scott Cooper, the OPM director, basically said managers have other ways to track progress, and the administration won't manage that process anymore, which, comes right after what reports called a tumultuous turn in the Musk-Trump relationship, especially after Musk left the Department of Government Efficiency, DOGE. So the question becomes, how does this shift impact accountability, efficiency?
Interesting timing. Okay, another big change affecting a lot of people directly. Social Security is phasing out paper checks nationwide, starting September 30th, though apparently less than 1% of people still get them anyway.
Right, but the story there is really about efficiency and security. Think about it. A paper check costs, 50 cents to process? And it's 16 times more likely to get lost or stolen than an electronic transfer, which costs less than 15 cents. So this is part of that broader push by President Trump to modernize federal payments. There are exceptions, of course, for people with mental impairments, folks in really remote areas, or people over 90. But it's a clear move towards digital, streamlining government.
And speaking of government pushing into finance, there's this executive order in the works, aiming to fine banks if they drop conservative customers. or crypto-linked ones, based on alleged political bias. Trump himself said JP Morgan and Bank of America rejected him, which the banks deny, right? They cite regulations.
They do, and this really highlights that tension, doesn't it, between complex regulations and political pressure. Banks argue they have to follow strict compliance rules, risk assessment, anti-money laundering, all that. But the executive order seems to suggest a worry that maybe those rules could be used for, well, ideological reasons, which definitely puts banks in a tricky spot, caught between politics and financial protocols.
Okay, so shifting focus a bit from domestic policy to the global stage. Trade and tariffs, clearly a major tool being used right now. The average U.S. tariff rate is now 18.3%, highest since 1934, apparently.
Yeah, that's a huge jump, and it has immediate ripple effects. Global supply chains, international relations. Take India, for example. President Trump's threatened to raise tariffs on them substantially, maybe higher than the current 10% minimum. Why? Because they keep buying Russian oil. India's argument, though, is that they need that oil for their consumers, especially since traditional supplies got diverted to Europe. It's a really complex tangle of geopolitics and national energy security.
And what about China? The trade deficit there has plunged, right?
Okay.
Lowest in nearly 21 years, $9.5 billion in June. Imports from China lowest since 2009. And Trump says he's very close to a deal to extend the current tariffs. There's an August 12th deadline looming.
Right. And this connects directly to something else, the de minimis exemption, that trade loophole. Starting August 29th, the administration is suspending it globally. It allowed duty-free shipments under $800 into the U.S. It already stopped for China and Hong Kong back in May. But now it hits everyone else. Companies like Chain, Temu, they use this for hundreds of millions of packages. Now they'll face duties. And that cost, it'll likely get passed on to consumers, could especially hit, lower-income households pretty hard.
So beyond tariffs, there's also this ongoing push from President Trump, pressuring companies like Apple, Samsung to make phones in the U.S.
Yeah, and the history there is really, well, it's instructive. Motorola tried this, over a decade ago. Moto X, made in Texas, 2013, 2014. They shut the factory down eventually.
Yeah.
Why? Higher costs, mainly. The supply chain was still fragmented. Components mostly came from Asia anyway. And they had real trouble finding and keeping skilled workers.
That delicate assembly work, it needs a lot of dexterity, as they put it. It's not just about wanting to build things here. There are real practical hurdles. And that points to a bigger challenge, doesn't it? The U.S. manufacturing sector actually lost jobs recently, 11,000 between June and July. There's a skills gap, a demand gap. Surveys show a lot of Americans just don't want factory jobs anymore.
Exactly, and compare that to China. Their manufacturing sector employs something like 123 million people. It's massive, integrated. Tim Cook, Apple's CEO, he's talked about China's craftsman skills, the robotics, the whole computer science ecosystem being ideal for smartphones. So if the U.S. really wants to bring manufacturing back, it's not just about building factories. It's about anticipating the skills needed and actively building that workforce.
And the tariff focus isn't just on electronics or consumer goods, it's also pharmaceuticals. Trump mentioned tariffs on imported drugs could go as high as 250% to encourage domestic production.
Which is a huge concern for the pharma industry. They're warning about several things. Higher costs for patients, obviously, but also it could deter investment in U.S. drug development and potentially disrupt the drug supply chain, which, puts patients at risk. Drug makers are already dealing with other pricing policies like that most favored nation rule. So it's a question of balancing that goal of domestic production with, well, the realities of a global supply chain that keeps drugs accessible and affordable.
Right. And speaking of costs and incentives, there's the new tax and spending bill. Signed July 4th, it ends the big federal EV tax credits after September 30th. The $7,500 for new EVs, $4,000 for used ones, that's a pretty big blow for EV makers.
Oh, definitely. And you can see the impact already. Look at Rivian and Lucid. Rivian reported a bigger loss than expected. Why? Higher costs, partly from China curbing rare earth metal exports. Those are crucial for EV motors. And also less income from regulatory credits, which the Trump administration got rid of. Lucid also lowered its production forecast for the year, missed Q2 estimates. And what's really striking is that demand for pure EVs, it's actually been slower than maybe people expected. A lot of consumers seem to be leaning towards cheaper hybrids right now. It feels like the market maybe isn't quite ready for an all-electric future without those incentives.
Okay. Shifting gears to tech more broadly, AI, the rise of generative AI, especially since ChatGPT came out in late 2022. It's clearly fueled massive growth for companies like NVIDIA, now the world's most valuable company. Experts are even saying AI models are basically on par with human software engineers for, routine stuff.
Yeah, which naturally leads to the question, what's next in the AI chip race? NVIDIA dominates, no question. But the big AI players like Meta, OpenAI, they're starting to look seriously at AMD for alternatives, especially for inference. That's the part where you actually use the trained AI model. AMD just announced new chips, the Instinct MI400s, coming next year. And significantly, OpenAI's CEO, Sam Altman, publicly committed to using them. So that suggests maybe the market's starting to diversify a bit, not just NVIDIA anymore.
And speaking of OpenAI, they just released something interesting. Two lower-cost open-weight models, GPTOS 120B and GPTOS 20B. The idea is they're easier for developers, researchers, companies to run and customize. You could even run the smaller one on a laptop, like a personal assistant.
Right, and what's really compelling there is the focus on transparency and control. These are open source software models. OpenAI says they did extensive safety testing, even tried to mimic how bad actors might try to misuse them, all to make sure they don't reach a high capability for causing harm. That commitment to transparency is pretty important right now, especially when you see things like NVIDIA having to deny accusations from China about kill switches in their chips, remote ways to disable them. NVIDIA called them security vulnerabilities, but it highlights the need for trust in this whole AI space.
Okay, let's turn to Elon Musk again. Quite a week for them. He was just awarded that massive pay package from Tesla. $29 billion, even though Tesla's stock is down 25% this year. That seems extraordinary. What's the thinking there?
It is definitely a head-turner. Tesla's board, their rationale is that Musk hasn't really gotten meaningful compensation for 8 years, and they're also appealing that court decision that previously rejected his 2018 pay package. But it also ties into this bigger strategic shift for Tesla. They're trying to position themselves less as just a car company and more as an AI and robotics company, robotaxis, that sort of thing. So the board sees this huge payout as, well, an incentive for Musk to lead that future vision, especially while car sales are facing some headwinds.
Got it. And in another tech titan move, Linda Yaccarino, she just left X, Musk's company, after 2 years as CEO, and she's landed a new gig, CEO of eMed, a telehealth company in Miami, dispensing weight loss drugs like Wegovy, Ozempic. That seems like quite a pivot.
It really does. A significant shift. Her background is mostly marketing, media, not really healthcare directly, but her stated goal now is about combining technology, lifestyle, and data in a new, powerful way through digital channels. Basically using tech to make chronic care, like managing weight, more accessible. It really mirrors that broader digital health trend, using tech to get healthcare to more people.
Okay, sticking with tech deals. Cybersecurity. Palo Alto Network's CEO, Nikesh Arora, just made a huge bet, acquiring CyberArk for $25 billion, second biggest U.S. tech deal of 2025 so far.
Yeah, that's a massive move. And what really stands out is Aurora's vision. He wants to create a one-stop shop for cybersecurity. The market now is really fragmented, lots of different vendors. Wall Street seems a bit skeptical. The stock dropped 16% on the news.
Yeah.
But the idea is to tackle that surge in really sophisticated cybercrime, a lot of it linked to AI advancements. Companies want to simplify, maybe consolidate their security tools, improve efficiency, reduce weak spots. So it's just a big consolidation wave might be coming in cybersecurity.
And one more on tech meeting health. Hinge Health, the digital physical therapy company. They just IPO'd in May. Reported strong Q2 results, beat estimates, revenue up 55% year over year. Their CEO talked about the potential of using software and connected hardware to, quote, automate care delivery itself.
Right, and that strong performance, especially right after an IPO, really highlights how fast this area is growing. It signals a move beyond just basic telemedicine towards actually automated, digitally guided care, gives you a glimpse of how tech might make therapy, chronic care management much more scalable and accessible down the line.
Okay, let's look at media now. The New York Post. They're making a pretty bold move, expanding to the West Coast, launching the California Post in early 2026. Same style, splashy covers, gossipy reporting.
Yeah, it's a really interesting gamble, especially because it's a daily print edition. They're aiming to fill what they see as a void in California's news landscape, which they called atrophied. Lost a third of its papers since 2005, apparently. And it's also a clear shot at the LA-based entertainment trades like Variety, Hollywood Reporter. They're leveraging California being, the epicenter of entertainment, the AI revolution, and advanced manufacturing. The big question, though, is can a print-first approach really succeed in today's digital world? It's a bold bet.
Definitely feels counterintuitive. Okay, finally, let's talk about Jaguar. They faced just a storm of headlines about sales plunging. Some reports said a 97.5% drop year over year in Europe for April. That sounds catastrophic. President Trump even criticized a woke ad campaign they ran.
Right, but what's absolutely fascinating here is digging into the nuance behind those headlines. Jaguar actually stopped making cars entirely in 2024. Why? To reinvent themselves as an exclusively electric vehicle maker. So that massive sales drop, it was completely expected. It's part of their transition plan, not a sign of failure. And it's also worth remembering, Jaguar Land Rover is owned by Tata Motors. It doesn't have its own separate market cap like a standalone company. So this is really a story about a brand in deep fundamental transformation, dealing with the tough realities of shifting to EVs while also battling external narratives that frankly miss the full picture of what they're trying to do.
Wow. Okay, so we've covered a lot of ground today, a real deep dive. From, the integrity of economic data to these huge strategic shifts by tech giants, the complex dance of global trade, how old industries are trying to reinvent themselves. It's really clear how interconnected everything is, often in ways you don't see at first glance.
Absolutely. We've seen how policy decisions in Washington can just ripple out through the job market, supply chains, how tech breakthroughs like AI are just fundamentally reshaping entire industries, corporate strategies, and how companies are constantly adapting to consumers, to politics, sometimes by completely changing who they are, like Jaguar.
So, what does all this mean for you listening? Well, I think it means understanding that the forces shaping our world are complex, often with hidden connections, connections that impact everything, your job prospects, the price of goods. It also means recognizing that even when data gets challenged or stories get simplified, the underlying importance of good information for making sound decisions, whether you're the Fed or running a small business, that remains absolutely critical.
Yeah, and it really raises a compelling question, doesn't it? In this era where information is everywhere, but also constantly contested, and where these huge economic and tech shifts are happening so fast, how do you, as an informed individual, keep discerning what's real, what the genuine implications are, and how do you strategically prepare for a future that seems to be redefining itself almost constantly?
Definitely something to mull over as you navigate your own world. Thanks for joining us on this deep dive.